Good morning, everyone, and welcome back to another episode of the Crypto Morning Coffee. I have my coffee locked and loaded, ready to go, because we have some very interesting stuff to talk about. Obviously, about the US CPI that has come in bigger than expected and what that could mean for the market and the next couple of months, but we're also going to talk about SEC labeling NFTs as securities and what that means for our NFT projects and what that means especially for VeVe and maybe Ecomi. But all of that right after the intro. Good morning, everyone. How are you doing? Green Lantern HD, Dr. Knut, how is the weather in Heidelberg? I hope you also have a little bit of cooling down of the air. G-Money is here, good morning to you. And straight out of my bed, hey, straight out of your bed, hopefully. Good morning, gang. How is the gang doing? How is our gang or squad or squadron or what is it? We have never talked about this, right? But we are definitely hotless, that is for sure. Let's jump right in. But before we do that, then sunny weather in Heidelberg. Here it is raining in Munich. But before we jump right in, please guys, do me the favor, smash up the like button right now. To give this stream a boost. That is always necessary. The only language that YouTube understands, so a like is very much appreciated right now. Subscribe to the channel if you haven't yet, and tick the little bell to never miss out on the live streams or videos. Also, a quick announcement. I am getting an important visit here at home, so and also with that visit I'm going to travel, so that means that for the rest of September the morning stream has to occur irregularly, because if I'm somewhere at the end of the world or in the Alps or in northern Italy or I don't know what, then it will be a little bit more difficult to get the stuff out. And also I have holidays, so just so you guys know that are already here or that watch this later. But without going too much into all of this stuff, let's jump right in. There we go. So, August core inflation, excluding food and energy, rose by 0.3% hotter than expected. So the consumer price index rose 0.6% in August, its biggest monthly gain of 2023. Inflation gauge rose 3.7% from a year ago. So we have, unfortunately, what we discussed yesterday, our uptick in the inflation rate, and therefore an argument for another rate hike, maybe not this month, but potentially next month. And we are not sure then if the Fed is really done hiking. So the core CPI increase 0.3% and 4.3% respectively, against estimates for 0.2 and 4.3%. So Fed officials focus more on core as it provides a better indication of where inflation is headed over the long term. And as we also discussed yesterday, energy prices are a big driving factor. Yesterday we have seen that crude oil has been closing very high compared to other energy forms. The price has gone up significantly, and that is obviously bad for contracting economies, because, for example, Germany is now officially one of the only nations that is going to have a contracting economy. I think it's negative 0.4% or something like that. And obviously cheaper oil prices would help increase economic activities, right? Because if you have cheaper access to energy, then companies can maintain their prices stable and maybe put even out more at lower prices so that people can afford it. Good morning. Will you be on the community meeting on the 6th of October? Unsure yet, because that's actually right at the time where my visit here leaves. So it's unsure if I will be there, but I'm trying to make it. So here we see, but are you going to be there, Felipe? Are you going there, or is anyone else going there? It's a community meeting, by the way, because this is an English stream. It's a community meeting in Germany with German Veve fam. So yeah, but here we see we have the inflation of all items in blue, and then we have the core inflation, and you see also the core inflation already came back, did another peak here. While the all items inflation has not peaked out. So what we see is that the inflation, less food and energy, is just coming down. The uptick is only with energy. So this is a fluctuation in the shorter term, but in general it will over time impact the inflation rate that is sitting here at 4.3%. So as far as I recall it, the Fed is going to look at this trend here, the less food and energy, and maybe this could lead, since this is still in a downtrend, this could lead them to not do a rate hike and see one more month, one more CPI, what is happening. So yeah, we see here energy prices fed much of gain, rising 5.6% on the month, and an increase that included a 10% surge in gasoline, and that is because the OPEC, or the oil producer, so to say, the cartel there is reduced, or has reduced significantly, the oil output. And I don't know if this is really a good thing in when you have so many contracting economies around the world. Felipe says, I will try, but it could be that I will be in Copenhagen instead. Hey, look, Copenhagen is also really nice. So I think there will be more meetings also in Germany and across the world regarding VeVe, and especially once excitement is coming back into the market. So I think there will be many chances to meet. But that's basically this, the core inflation here. So this was what we have expected here. Now today we are getting PPI inflation, retail sales, and jobless claims also to get a bigger picture. We have looked at this in the last days, and we can now see what the probability is for the rate hike. And we see here that actually the estimate for another rate hike is even lower, that we are getting this is only 3% versus 97% no rate hike expectation in 6 days. So this could be very good for the market if we do not get that rate hike. And the rate hike in November, if we get it, is already expected since a longer time. So we see here we have a 56 no and a 42 yes, and only 1.2% chance of having 2 rate hikes until then. So here is still a big estimate that it could happen, so it would not shake the market as much as if we were on a 97% here, and then it happens, right? And then for December it's the same. So probably they're unsure when it will happen. Yeah, Crazy Dan says, and US blowing up the Nord Stream pipeline has caused natural gas prices to soar in Europe as well. Yeah, I mean, I know that the discussion has been going on for a long time. Who was that? But in the end, there are only a couple of suspects where it really makes sense, right? Who blew up this pipeline. And for sure, it's not in the interest of a specific nation that is currently at war to do that. So yeah, but still, I think in a couple of years we will have clarity about. Maybe we'll have clarity about who blew that thing up. But until then, everyone will just scream conspiracy, conspiracy theory when you're saying stuff like that. But I think it's reasonable to assume that this could have happened. Who knows? Definitely, as far as I recall it, Germany has or had the control over the area where this happened. Yeah, and I think the discussion is not going on anymore. I know that at some point they suspected some climate activists or so that have done it, but I mean, the size of this blowout, you really need to hide a lot of explosives to make that happen. But anyways, now this is very interesting because this relates directly to our inflation rate and to how the economy can come out or not on this. And this is here, the OPEC just said that global oil markets will face a massive supply shortfall next quarter. So if the supply shortfall is happening and then the demand stays the same, prices will soar even more, and that could lead that also CPI is coming up more just because of this oil shortage. So the expected supply shortfall of more than 3 million barrels per day, if OPEC is correct, it would result in the biggest inventory drawdown since 2007. Voluntary production cuts by OPEC members are removing 1.3 million additional barrels of oil supply every day. Higher oil prices are back and the US reserves are at record lows. The battle against inflation continues. So here we see actually how this looks. So we already had this kind of a shortage in Q3, which is why we have the higher oil prices, and Q4 seems to be going even worse. So expect some more turmoil in the market just because of that, and expect that there's more discussion about rate hikes, and that could lead to more sideways action in Bitcoin, right? So and then also this here, very interesting in my opinion. Let me get this to the side a little bit so you see the full chart. So this also here, global liquidity is down a massive 1 trillion over the last 10 weeks. Since the high in 2022, 4.2 trillion in global liquidity has dried up. We are now back down to pre-pandemic liquidity levels after printing and handing out 4 trillion in stimulus while lowering rates to 0% overnight. The party is over now. There's no such thing as free money. Are we nearing a liquidity crisis? Because we see here the world liquidity outstanding in billion was world liquidity adding 12 trillion. Actually, it's trillion here now. 12 trillion over the since basically they started the money printer in 2007-8 when they had to print against the US subprime crisis or everywhere in the world, and then they slowly added 12 trillion, right? And then they rapidly added 11 trillion. Now we have a reduction of 4.2 trillion in world liquidity to bring down inflation. So yeah, we are not sure how far this graph or this chart will fall, but ultimately world liquidity decides also how our price action is going to be for Bitcoin and crypto and everything else. So yeah, let's see how this impacts. But I mean, pre-pandemic, I don't know if that's really true, because look here, 11, maybe they mean the US or something like that, but 11 minus 4.2 trillion, I'm not quite sure if this is like pre-pandemic level. or if they are calculating a normal uptrend into this anyways. But yeah, what we need to see is if we see the turnaround of global liquidity, that's when we see massive price action. And I don't think it will take too long, because I mean they are already asking if we are nearing a liquidity crisis. So they're also saying here from this Kobayashi letter, we have gone from trillions of stimulus to highly restrictive Fed policy at a record pace. This is why affordability has also plummeted at a record pace. Liquidity is likely to continue contracting this year. So this is at least into the halving, right? Probably we are going to see more contraction. And then the big question is, how much can the economy and everyone else take? And then the last one here, because I found it so interesting, I pulled up 3 of these. Let's look at this one as well. So we have the household liquid holdings, right? And then historical trend adjusted for inflation, and the forecast of household liquid holdings is the red line here. So we are really seeing right now that the household liquid savings are coming down versus the historical trend coming up. So both are nearing each other more and more, and usually probably once this is adjusted, it will just go in a continuous uptrend. But this is still, we cannot get this wrong. In total, this is still an uptrend, right? As long as it doesn't cross the black dotted line. So if it seems like liquidity is drying up, that's because it is. According to JP Morgan, current access household liquidity stands at 1.4 trillion. However, they expect that liquidity to be fully depleted by May 2024. Access household savings are being depleted at a rate of 100 billion per month and expected to be depleted this quarter. So the expectation of this household liquidity completely being depleted is already this in the end of this quarter, around Christmas. This is why household debt levels are skyrocketing. So liquidity is drying up. That means many households are living beyond what they can really afford and starting to live off of credits, which is also not so good. And that usually means that that spending exceeds earnings, that earnings are not following price increase, therefore plummeting in this liquidity, and therefore spending is going to be reduced at some point when credits cannot be afforded anymore. So I think I just want to make you aware that we are still in this situation. And this is, in my opinion, also why Bitcoin is going sideways, why altcoins are mostly going down if you look at the month. For example, here, let's look at the market. So today we have a very green day. This is nice. We see some pumpers, right? This is the normal market making, the normal price action. Let me get this to the side and see who the biggest gainers are. So while Hex is getting wrecked, we see H-bar pumping, Rune is going up, Casper is 9.3%, second biggest mover, but we also see many greens in the market here. Apecoin, the Graph Maker, Litecoin, Sui, Render, all of these coins are having a green day. But if you look at the week, you already see on the week, even though we have some green days, we have mixed feelings already on the week. And if we look at the month, it's a bloodbath, right, on altcoins. And the reason for this is no one is spending on crypto right now. Everyone is spending on the basics, on whatever they need to afford, on energy bills, on restructuring. So we see a lot of this coming right now here. Arbitrum minus 30%, CFX minus 38%. This is only on the month, right? If you go on the year, obviously, you have some big movers year over year, like Injective, Render, Casper leading the charge here behind the chat. But that's basically this history. So nonetheless, and this is what I did not expect. I thought the DXY would be skyrocketing, right, on this news. However, it seems that really the core inflation is the driving factor here, and it seems that we are not expecting much more of an uptick here, because probably we are not getting this rate hike. So following this trend line, as I mentioned before on the DXY, we want to see us dropping out of this trend and then see what we can form here. So maybe we can form something like, we can come up a little bit more and form something like a head and shoulders or something like that, right? So we are closely monitoring. In the next couple of days we could get this drop here actually, because if we do not get that rate hike in the next 6 days and we do not have a reason to surge on the dollar, then we should be getting some good days for crypto once again. Let's look at Bitcoin here as well, because Bitcoin also really refuses to collapse more at the moment. So here we go, and I will outline quickly how this scenario could look like, so everyone who is here understands what all these lines are for Bitcoin. Maybe we can now say, okay, cup and handle, not necessarily, because we can take these lines maybe out. It could still be in place, but I take this out just for visibility reasons, because I mean, we have discussed shoulder, head, right shoulder, something like that, right? This is still in play in the weekly, so we could still come down here, and the trend here is also still down. But what we have is this here, we have the bounce on the same level as we did here, so we have kind of a double bottom or so scenario here, a double touch on this resistance, which we cannot discard that this could be some bullish move. The RSI has plenty of room for a rally, and even though with the death cross we are still clinging on here onto this level, and we have 2 consecutive big green days right now, and today is also green, while this is a bullish engulfing candle on the daily, right? So this is first and foremost a bullish move. Now we will have to see if we can take out over the time this level to have some kind of a reversal, or if we are going to fail and come back, or if we are going sideways and up and form something like a bigger shoulder. So there are many bearish scenarios and a couple of positive ones with a double bottom scenario here. But let me go into the weekly and show this to you there. So on the weekly, first of all, if we were to close today, which we aren't because there's more than 3 days, we would form a nice hammer here on that chart. So here you see it, right? That would be big. Other than that, here we see it a little bit better, right? So if you would say you have a head and shoulders here, we could form something like this and it would take weeks. However, we are coming closer and closer to the halving, so anticipation would then maybe drive the price. But we have also outlined that we had already a finished head and shoulders on this trend line, which broke down here. And yeah, technically this could come a little bit lower to this moving average, for example. We still leave our target in here because we are not certain yet that there is not a shoulder or something coming in for us here where we would still break down to this target, because the measurement of that target is the same as it would be only considering the cup and handle. So this is the bullish and the bearish case. So what we could obviously see is that we get some positive news over the time, no rate hike, and that we come up, and yeah, basically that we are slowly creeping up from here and do a continuation. So quickly, a quick peek into the market. If there's anything new, there is not, other than the Nasdaq is added again, trying to break this downtrend. Here we see it again. If the Nasdaq breaks the downtrend and we manage to put a higher high into this, then I think we are looking at some very bullish days for crypto. But until now, we see here there's more and more confluence where this trend line did not break, and we have this in for a longer time now, and it just works beautifully. If it breaks, Nasdaq is going up, in my opinion. I think we can skip over, but yeah, Bitcoin dominance just quickly, without too much of analysis, but it's coming up again. I think that's important. Altcoins don't like this too much, but it will. I think it will rally more once Bitcoin starts moving again. Let's also have only a quick look at Ecomi before we are dealing with the SEC versus NFTs. But here we can see that for now, this level is actually holding for the moment, and I really can't stress enough what I want to see here, and I would go so hard on Ecomi, or as hard as I can, is if we see something like this forming out, right? Oh my god, that would be so good. Like if we would see some long rounding bottoms here. I don't want to see any chubby stuff, right? Any choppy stuff, sorry, not chubby. Any choppy stuff. I mean, I take it, but what would really be looking good is if we had somewhat of a rounding bottom here. Obviously, maybe not that big, but let's say something like this big until to the end of the year, and then or something like this, so until December or something like that, and then get a December breakout, December rally into the next year, and start into the halving already with a higher Ecomi price. That would be awesome. I don't know if it will happen, but for now the levels are holding pretty good, and we will observe this. And obviously, what is very important, nonetheless, if I get my rounding bottom there or not, is that we put in a higher low here, so that we really have this uptrend confirmed, right? What we don't want to see is that we somehow collapse and drop down here. That would be really bad. That would make us bearish on Ecomi once again, and no one wants that at the moment. What we want to see is that we can say we have found our bottom here, together with many other altcoins, and that we are now looking forward to the first altcoin season, right? So we really want to see something like this. Okay. Guys, if you want to see this as well, then please do me the favor, smash up the like button on this live stream, and let's talk about the SEC. This is a little bit of a wall of text, but I think if I get this big enough here, you can see the headline. There we go. So the SEC charges creator of Stoner Cats web series for unregistered offering of NFTs. And we are going to read the first part of it, because it basically explains what happens. So the SEC today charged Stoner Cats 2 LLC with conducting an unregistered offering of crypto asset securities in the form of purported non-fungible tokens, NFTs, that raised approximately 8 million from investors to finance an animated web series called Stoner Cats. According to the SEC, so here's the first clue already. It has been raised, the NFT have been raised to finance this web series, okay? So according to the SEC order on July 27, 2021, SEC2 offered and sold to investors 10,000 NFTs for approximately 800 each, selling out in 35 minutes. The order finds that both before and after Stoner Cats NFTs were sold to the public, SEC2's marketing campaign highlighted specific benefits of owning them, including the option for owners to resell their NFTs on secondary market. So this is the second clue, because the important part here is that their marketing campaign highlighted specific benefits for owning them. So we have selling for financing the project and then giving in return specific benefits for owning them. Okay. In addition, the order the possibility of reselling on a secondary market. In addition, the order finds that as part of the marketing campaign, the SC2 team emphasized its expertise as Hollywood producers, its knowledge of crypto project, and the well-known actors involved in web series, leading investors to expect profits because a successful web series could cause the resale value of Stoner Cat NFTs in the secondary market to rise. So this is here what they outline is the expectation of profit because of the marketing campaign of them. Okay, so further, the order finds that SC2 configured the Stoner Cats NFTs to provide SC2 a 2.5% royalty for each secondary market transaction in NFTs, and it encouraged individuals to buy and sell NFTs, leading purchasers to spend more than 20 million in at least 10,000 transactions. According to the SEC's order, SC2 violated the Securities Act and selling these crypto asset securities to the public in an unregistered offering that was not exempt from registration. So, very important here is many people are already running around on Twitter and are talking about how this applies to VeVe as well. And I want to highlight a very big difference to VeVe, although that the secondary market with royalties is technically there. There are many significant differences here to VeVe. First of all, VeVe did not launch their NFTs to finance a project which then would give return. VeVe has maybe used Ecomi for that, but VeVe did not launch the NFTs to finance their project. They did not do an initial NFT offering, so to say, and in that marketing campaign basically suggest returns for investors, right? So that is the first one for the NFTs, and we're only talking about VeVe NFTs. The second part is that yes, VeVe has a marketplace with enforced royalties, and yes, 2.5% funny is going to VeVe, but it's not the only one. So actually there is an endeavor where many companies are benefiting from that, including, for example, Disney or Warner Brothers or others that are also getting shares of the royalties from that secondary market. And there are no royalties that are going to previous holders. For example, like the what Disney tried to get a patent on a while ago, enforceable royalty chain where the previous owners also are part of the royalties. They obviously did not get that, but these are major differences between VeVe and Stoner Cats. So I think the biggest point here is basically creating that expectation of return. And this is also why David Yu, in my opinion, has gone on record and basically saying that they have increased edition sizes during the bull run to cool the market down because they did not want to have this price increase. He said that he has gone on podcast, and with that said, he basically did the contrary of all of these NFTs here, because he basically said that there shouldn't be any expectation of profit for Veve collectibles. And then afterwards, if it still happens, that's different, right? You could argue now that the behavior of the Veve team in many cases was suggesting expectation of profit, but it has not been done on the initial offering of one round of NFTs to finance your project. And I think that's where the SEC is hammering this point home. And yeah, we will see what is happening. I think this is here. I mean, they are charging stoner cats. Everyone is already acting as if they had already won their lawsuit, right? So this will now come down to a prolonged, probably, decision, right? But we have seen the same thing with Impact Theory, where Impact Theory launched NFTs worth approximately 30 million or so US dollars, and they have gotten a slap on the wrist with promising returns on those NFTs. So they're I think VeVe is very, very careful until we have precedents here that actually some of these companies can win against the SEC. But we will see how this goes. And then what we also see here is Stoner Cats NFT sales surge after the SEC reveals the charges. So this is also very interesting, because you would see, or you might think, that these NFTs are now worth less because probably they cannot give back on the promises that this holds value. But what we see is that actually dozens of Stoner Cat NFTs on Ethereum have been sold since the SEC enforcement action was announced Wednesday morning. According to data from OpenSea Marketplace, just one NFT from the project was sold on Tuesday by comparison. So it has increased volume instead of bringing it down. So maybe the recipe for the VeVe market coming back is that they get investigated. But in the process, the lowest listed price for NFTs in the project shot up from $30 this morning to a current price of $79 as of this writing. And I think it's super interesting, because if you see this, I mean, these prices for an NFT that has cost $800 in the marketplace. I mean, look at VeVe and look at what NFTs are worth there. So this is a 10,000 edition NFT, obviously, I understand that, but this has been down bad, really bad. Now it more than doubled in price. So why buy up NFTs for a project prominently promoted by co-creator and voice actor Mila Kunis that already concluded its content production in 2022 and has been charged by the SEC? Some people may be buying them as a gag for the lulz, or as cultural relic as a prominent NFT project that has faced regulatory action. Others may hope that they will gain secondary market value given the project's new notoriety, or perhaps that there will be a way to return the NFTs for a refund. So these are all valid points. I think that that is just, it's in the news, people notice it, and some people bought some on speculation. I think that's what the real reason what it is. Everyone speculating on price going up, price did go up, made a quick more than 100% return, and can maybe sell them for $80 and now instead of 30. Speaking of which, I mean, you saw the Stoner Cat NFTs, and I cannot stress enough that we are in the best NFT project in the space with official big brands. Here's the next one-of-one artwork, looks extremely good. This is the Mary Jane and Black Cat, number 4, a must-have for Black Cat fans, absolutely. And this is not the most important one, because we see, maybe let's start with this one, we are getting another, actually we can't probably leave this on. We are getting another Star Wars drop here, Star Wars NFT drop for the vehicles. So there are a lot of vehicles coming out, and this is the Darth Vader's shuttle here. I think it looks very good. You get interactive and animated, so it has sound and animation, and hopefully it can also interact with collectibles. Nonetheless, it looks really good. People are already yeah, creating scenes with the vehicles that we have before. We saw that yesterday, and part of this drop apparently on Sunday is this here. Sorry, let me get the sound straight before. Okay, there we go. So this looks really good. I just checked, and Stoner Cat NFTs floor on OpenSea is now $121. Yeah, you see. So this is actually now a very a quick 4x on the price, right? But here, yeah. So here we go. The ATST is the rare, and this one is, yeah, it is also looking really good. I think I have to say, I think Veve collectibles are really getting better. They are really getting, look at the animations of this thing. This is smooth. And if you imagine that in the beginning we had, like if you, for example, look at the secret rare Thor or the ultra rare Thor, the animations they're fine, but they're a little bit clumsy, right? But now the mechanic animations, they are getting better and better. So of these spacecraft. So really, really good. In my opinion, we will see. We already have the article, so we can look at the scarcity of this drop as well. Star Wars Vehicle Series 5 ATST collection waitlist drop. So here we go. So there will be 3,500 of the rare. I think that's too much. I think there should be less of the rare. And then wait, is it only this one? Oh, so this is two different drops. It's not in one drop and then a blind box. It's two separate ones. Okay, I get it. So this is 3,500, and this here is also 3,500. So I don't know. I think I would have given it a little bit more scarcity. But then again, probably it will sell out anyways, because both of them are probably desired by Star Wars fans. Hopefully it sells out, because that would be a nice return, and also it would be a good thing for Veve to sell out this stuff in a bear market. But in my opinion, these Veve collectibles, they have really gotten better and better over time. So yeah, I think this looks really, really good. Here, for example, there's animation on the bottom, so the feet, they come in and then the wings go out. So yeah, I hope there's more to these collectibles in the future, like somewhat of a use, also that you can use them maybe in some racing game or something like that. That would be insane. But yeah, I think they are doing a great job. Then I also saw this. So there are the people that claim there are no collectors on the app. So here's an example against this. In my quest of 1987 Star Wars matching FA, great edition today. 1987 Luke Skywalker saber. Thank you, Veve Believer, one more time. And we see here this guy has already the ultra rare Darth Vader 1987. Now he has the lightsaber. He has Luke. He has Obi-Wan. He has here he is missing the 1900. He has a 987. So this is here he still needs this. And then he has there is a 1987 X-Wing plus a matching mint set of 1987 Golden Moment Star Wars figures. So that is really crazy. This is a massive achievement in my opinion. That is a hell of a collection, yeah. So he just added the Luke Skywalker lightsaber into this collection, and I mean, he's missing some. Yes, he is missing a TIE fighter, for example, 1987, stuff like that. But he's still on a quest. So this is what some people are doing. Some people are collecting their birth year. Some people are collecting specific years of specific NFTs. So there are collectors on this app, and they're searching for specific mints. It's not it's not that there are no collectors on the app. I think it's just in comparison to thousands and thousands of users now, not everyone is a collector, right? But this is part of the game. And yeah, then I think this was funny. I wanted to show this to you as well. Gorillionaire here posted VeVe users in 2022 versus today. This is super funny. Yeah. Oh my god. Okay, but this is somewhat true, right? If you look at the market, this is exactly how we feel. Yeah, so user growth stable, nothing too much here. In the user growth, we are still in an uptrend. I think that is fine for now. We have lost 9 wallets that sold. Let's see if we have any more action from our whales. Let's do some whale watching here, and therefore we can get out of our view here. Okay, so there we go. No new purchases, or almost no new purchases from Bitzogeman. Couple of net accumulation is slightly up. So the other wallets are actually going heavier into the market right now as prices are lower. So we see that 13, 15, 16 and number 19 have accumulated bigger parts. Also here number 17, bigger parts of collectibles, while number 13 is always minting a lot of stuff. So yeah, interesting here in my opinion. Overall net accumulation is very positive here, completely positive for the top 25 wallets. So overall, I think slowly but surely top wallets are grabbing all of the super low stuff on VeVe, while fear is raging among the people in the lower parts, right? That just see their vault value going from 1,000 to 100 and stuff like that. So they will come back when prices are higher. Let's see if Bitzogeman did any interesting purchases here. I think yesterday he bought some. Yeah, so he bought some older stuff which doesn't have metadata. So we don't know. Actually, there's a lot of season 1 stuff that doesn't have metadata. He bought Spider-Man Uncommon, Ultraman posters now for some reason. So maybe this is other Ultraman stuff that doesn't have metadata or so. Yeah, so we see a lot of stuff that doesn't have metadata. And then, oh, he bought Journey into Mystery stuff, Electras, Snow Globes. So he has been, okay, so actually this is not in VVX tracker, but he's been buying 2 hours ago. So all of this, Lamborghini, the pencil, the Pink Panther, all of this stuff that he bought here was in the last 2 hours, and he's still buying. Look at this, 15 minutes ago. So this guy is still buying stuff. So only 15 minutes ago he did buy some Spider-Man. So overall, I think we're still on track there. And for today, I will keep it at this stream. So guys, if you want to do me the favor, please smash up the like button right now for the live stream. I would really appreciate that. And subscribe if you haven't yet. Tick the little bell to always get notified. And I will end the stream a little bit earlier here today because I have a lot to do. And yeah, wherever you are on the world, have yourselves a great morning, evening, day, night, or afternoon. And I see you in the next Crypto Morning Coffee live stream.